Good morning, everybody. It's Wednesday, November 29th, 5:26 a.m. Central Time. March corn futures down 0.75 cents at 472 and 3/4. March soybeans down 1 3/4 at 1363. March Chicago wheat up 1.5 at 573.5. March Kansas City wheat up 4 1/4 at 622. March spring wheat down 1/4 cent at 713. We've got some more news out of Brazil.
Another Brazilian consulting group has lowered its soybean production estimate. According to MB Agro, the season's Brazilian soybean crop is estimated to reach 155 million tons. The estimate is 10 million tons below the group's initial projection. The reduction is due to drought conditions across Mato Grosso. The group also reduced Brazil's 2024 soybean export potential to 96 million tons, down from 100 million tons previously projected.
I am not an expert on Brazilian consulting groups or anything for that matter, but I've never heard of this group. And maybe if you're a group that's not as well known, maybe the way to put your name on the map is to come out with like a low ball estimate. That being said, I don't know that they're crazy. Cordonier has a 158 out with a downward bias, and he's very well followed and very well respected. So is 155 a crazy number? Who's to say? Not me. I'm not one to say. If 155 was the number in reality, that would actually be below last year's production number, which according to USDA was 156. So you're now no longer talking record crop. Now, make no mistake, 155 is still a monster crop, but markets and the way markets react to this stuff, it's all a matter of perception versus reality. And if the perception changes and we're going from ideas of a 165 to a 155, yeah, the market's going to react to that. The soybean market has been kind of sideways. We've got kind of a wedge pattern on the charts. We're kind of ebbing and flowing with Brazilian weather. That being said, there's not much rain on the radar here this morning. You're going to see some rain move into kind of some of these central areas later today. It's not going to be much, though. The forecast over the next 7 days is kind of a mixed bag. We're going to be dry for another, say, 2 or 3 days. And then Saturday, Sunday, and into Monday, you're going to see some rains across a lot of Brazilian corn and soybean country. They're going to be scattered. Some areas will hit, some areas will miss. So I read the forecast as being not necessarily dire, but not ideal either. We're kind of somewhere in the middle.
Russia Russia could ban grain exports if domestic supplies drop to critically low levels. Russian media outlet Izvestia, which has ties to the country's government, reported that grain exports could be banned if supplies dropped below the critically low level of 10 million metric tons. The chatter, according to the publication, comes directly from Russia's agricultural ministry. The ministry did say that current reserves are ample given large stocks from last year and a large 2023 harvest.
This whole thing seems really fishy to me. So this article from Forbes, if the grammar looks weird, it's because I had to translate it on Google Translate from the Russian version of Forbes because I didn't find this anywhere in any of the U.S. media outlets. I think Russian Times or RT had a piece on it as well. In any case, is this the Russian government trying to prop up wheat prices or something along those lines? According to USDA, Russian ending stocks of wheat last year were 14.6 million. Corn was 10.4 million. So that's 25 million metric tons of ending stocks. They're talking about a number below 10 million is when they would ban grain exports. So is this why the wheat market caught a bid? I don't know. It would make sense if it did. I mean, Russia's the world's top wheat exporter, and we posted a key reversal on the HRW wheat chart yesterday on this March chart. If you guys are watching on YouTube, key reversal, just like any indicator, is good about half the time. Don't hang your hat on that deal. But I don't know. I wouldn't read too much into this Russian wheat or grain ban story, but it might be good for a rally for a day or two.
According to analytics firm Agritel, Russia's wheat production could reach 90 million tons in 2024. When combined with stocks, the harvest projection would ensure that Russia's total wheat supply remained above 100 million tons for a third straight season. The bumper crop is estimated to include 65.8 million tons of winter wheat and 24.2 million tons of spring wheat. Russia harvested a record crop in 2022 at 96.5 million tons. This year's crop is forecast to be the second largest on record at 89.6 million tons.
There's some big variability in the estimates of Russian wheat production. USDA had last year's crop at 92, and I think that's the Russian government estimate, I believe, is 96.5. So I don't know why there's that variability, but this kind of maybe goes back to that previous story. Like Russia's going to have a big wheat crop, second biggest wheat crop on record. Weather in the Black Sea region has been mostly favorable as of late. Russia's caught some rains. Ukraine has caught some rains. So the production situation looks good there. And that's part of the reason the wheat market's been under pressure.
So, if you guys have not already checked out our premium content, you need to do so. Joe, can you tell me about this video put together with Shay Folk?
Shay was on yesterday. I was not on this video. And Shay talked about the economics of tile, whether you're installing tile on rented ground or your own ground. And he had, I believe, what he called his tile compensation tool, which is a spreadsheet tool that he made available to our premium subs. Really cool stuff there. And then on Monday, Chris Barron was on with me. We talked about this basis contract situation, especially as it relates to December corn right now, guys with basis contracts, best practices, what to do, that sort of stuff. If you guys want to see the premium videos, go to standardgrain.com, sign up this morning. This is a $50 per month subscription. You can cancel at any time, no other fee, no other obligation. This is the best way to support what we're doing here. The podcast doesn't pay us anything. YouTube pays us enough to keep the lights on. This is the premium subs allow us to do what we do every day in jumping on this podcast at 5:30 in the morning. So if you guys like the YouTube channel and you like the podcast, you'll absolutely love the premium sub. I promise. Sign up this morning and I will blast you over a copy of this morning's email.
USDA reported a flash sale of U.S. soybeans on Tuesday. U.S. exporters sold 123,300 metric tons of soybeans to unknown destinations for delivery during the current marketing year. Through last week, the accumulated book of U.S. soybean export sales was running 20% below last year's pace.
I think the future of export sales and shipments also will rely very heavily, of course, on Brazil and Argentina, what sort of crops they end up with. We've talked about this in the past. If Brazil ends up with a monster crop and the weather shifts and everybody's wrong about these production cuts, you could see China cancel U.S. purchases. If it goes the other way and the crop's really light, say it ends up at 150 or sub 150, I don't know, is that crazy to say? We could do more export business. So you're seeing sales. Sales are not shipments. This is not a huge amount, but we've got to keep an eye on it. And it all hinges on Brazil, I think, for the most part.
Nearly 3,900 U.S. auto dealers are calling on Biden to retract federal regulations that would require that by 2032, 2 out of every 3 cars sold in the U.S. would have to be electric. The auto dealers claim customers are not interested in EVs because of their expensive price, lengthy charging times, and reduced range in cold and hot weather. The proposed regulations are part of the Biden administration's goal to decarbonize transportation to hit its target of net zero emissions by 2050.
I feel like we hit peak EV optimism in like post-COVID sometime in 2021. Like that's when people were paying super high prices for these things and there was a shortage of them. And now you're to a point where like people don't want them. They're having trouble selling them. Some companies like Ford in particular, I think has lost a lot of money on EVs trying to keep up with Tesla and that sort of thing. I think you'll see more of this. I think you'll see more of the auto manufacturers push back on this. I think you're going to see the consumer push back on this. So let's just say that this is bullish corn because of the ethanol implication, just so we can say something nice today, I guess.
U.S. home prices continue to rise despite rising interest rates. Home prices in September rose 3.9% year over year. The rise in prices corresponded with the 30-year fixed mortgage rates climb toward 8%. The increase in mortgage rates has reduced home sales, but a shortage of homes on the market has supported prices. Rates have recently eased, however, which has led to a slight increase in mortgage demand. With home prices on the rise, rental prices are declining. From October to November, the national median rent declined by 0.9%.
This Case-Shiller index is absolutely insane. So this is the 20-city composite home price index. So if you live in rural America, maybe not totally reflective of what's going on in your neighborhood, but this thing is up 45% since like Feb 2020, which is your last pre-COVID month. And I believe that to be true. I live in a suburban area outside of Nashville, and home prices here are up every bit of 45% since pre-COVID levels. It's absolutely insane. And the fact that it's continued to tick higher with these interest rates is even more insane. There's a shortage of housing. A lot of it still goes back to 2008, 2009. They just stopped building houses and like we never really caught up. And then you ran into supply chain issues post-COVID, which further reduced the builders' ability to build essentially. So the housing market is just absolutely insane. Bull market, I guess. I don't know.
So, cattle futures finally had a positive day yesterday. Feeder cattle futures closed an average of 729 higher. Live cattle futures closed an average of 344 higher. They still have a long way to go to make up the losses that we saw between Friday and Monday. Choice box beef was 92 cents higher on Tuesday afternoon at 298.17, while select was a buck 45 lower at 266.35.
Outside markets this morning, guys, U.S. dollar is up a little bit. Stocks are higher. The S&P's up 14. The Dow's up 85. Stock market has acted really well here in November. Bonds are up a little bit. Crude oil is up $1.19 at 77.60 in the January WTI. Have a great day, guys. We'll talk to you on Thursday.